is J.P. Morgan Private Bank U.S. equity strategist Abby Yoder and Bernstein's top chip analyst Stacy Rasgon. It's great to have you both with us. Stacy, I'll go to you first simply because we could have the lowest close of the year for NVIDIA. When does the issue stop here? I mean, and what is the key problem right now, do you think?
Yeah, there's a few things going on. So, I mean, clearly AI, sentiment has deteriorated through the start of the year. The DeepSeek news was probably the trigger for it, although it's sort of funny that the only thing that's really happened from a demand standpoint since DeepSeek sort of came on the scene was demand going up, like not down. But it's clearly pressured sentiment. I think on top of that, when you start to layer in tariffs and just general like geopolitical uncertainty, I mean, it's hit a lot of stocks, but a lot of the AI names were also like high flying. And, given the increased uncertainty around spending environments and recessions and everything else, it's hit a lot of them pretty severely. So NVIDIA, as well as most of the other high flying AI names, have had a tough quarter.
Does it feel to you like they've corrected enough?
Yeah, I mean, if the numbers are anywhere close to being correct, like the valuations mostly across the board are pretty attractive. If you look at pretty much all of the AI names, whether it's NVIDIA or AMD or even Marvell or some of the others, they're all now trading kind of in the low, Broadcom, they're trading in the low 20s. If you believe in sort of the secular theme around AI, I think those are incredibly attractive valuations. The worry is clearly that people are uncertain about the earnings, right? So I don't know. I mean, that is sort of the big question. I would say right now, at least the demand environment still looks really, really strong. Just to pick on NVIDIA, like I think they're going to sell everything that they can get out the door this year. So that just becomes the question: how much can they get out the door? But at this point, I would say like the only ones that really seem to be worried about the AI like demand environment seem to be investors, like the companies that are actually doing the spending right now. Their capex forecasts and requirements and everything, they're going up, not down. So, yeah, I think if the numbers are anywhere close to right, these valuations are very attractive.
Okay, that leads me to you, Abby. I mean, have valuations corrected enough across the whole tech space?
Yeah, well, I think Stacy's point, right, is around whether or not the E is correct. Let's say, and we're pretty confident that it is, right?
Oh, really? Okay.
Yeah, so we came into the year, the Mag 7 was expected to grow 19%. Year over year, it's down to something like 16%, which is in line with the negative revisions that we've seen with the overall market. But today, you're now able to buy the Mag 7, and again, they're not a monolith, but if we're going to group them that way, sure, at the cheapest level in 6 years, since 2016. Right, so that's a pretty attractive entry point if you believe in that secular growth trend, which we do believe in.
Of course, if we actually have a recession or a deeper slowdown, does that impact the way you would think about it?
Yeah, but like you also have to think about, okay, if the concern is around the consumer, the predominant client of these firms are enterprises, right? So they're a little bit more insulated in terms of who their end customer is and how they're spending. And you think about company balance sheets, the cash flow that these companies are generating. I think that's something that stands out to us as being a little bit more resilient.
What about the market overall? I mean, 10% pullback, retest the low this morning. Does the price action tell you anything, make you want to lean in one direction as to whether you, as I've been asking the guests since we started the program today, did we correct enough? Mm-hmm. Does the worst feel like it's past? Mm-hmm. What do you think?
Yeah, I mean, I think there's some technical support around these levels, 5,400, 5,500. And again, I think the big question is this a clearing event? And the view isn't necessarily that it's a clearing event because you have to think about towards next week, we have earnings that are starting. So we're going to get some real tangible tidbits from companies around how they're thinking about what this outlook means for their corporate fundamentals. So it may not be a clearing event, but I think around these levels, we definitely feel comfortable at it.